Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTWSYS008 traders, and our website is www.tstwsys008.com. Today is the 5th of January 2015, and the time in London is 11 minutes past 12. Okay, it's now 12 minutes past 12 p.m. in New York, 12 minutes past 7 a.m. Happy trading to you all. The title of the video is how to draw Fibonacci arcs like a professional trader. How to draw Fibonacci arcs like a pro. All right. Fibonacci arcs allow traders and investors to pinpoint or to forecast possible price or market turning points. This is very important for us to understand. Whenever we are using any tool, we want to understand the tool and the purpose of the tool. So this is the purpose of Fibonacci arcs, to pinpoint or to forecast possible price or market turning point. I did not say guarantee turning point, all right, or certainty turning point, but I say possible, okay, price or market turning point, all right. These are guidelines that we use. We are talking about probability, not a certainty, all right. The Fibonacci arcs are the results of the application of Fibonacci ratio, 38.2%, 61.8%, 78.6%, and so on. Okay, the Fibonacci arcs are the result of the application of Fibonacci ratio, okay, applied to both the price and the time. All right, so we know that the Fibonacci time zone, which I talked about already at Day Pro Traders YouTube channel, all right. Fibonacci time zone, we are applying the Fibonacci ratio to the time, all right? You can watch the video at dayprotrader.com, check video about Fibonacci arcs, Fibonacci time zone by Day Pro Traders, okay? Or subscribe to our Day Pro Trader YouTube channel. But when we are talking about Fibonacci arc, the Fibonacci arc is applying the Fibonacci ratios to the price and the time. Not to the time alone, but both to the price and the time. The normal Fibonacci ratio that ordinary traders know is that we draw it like this, and these are Fibonacci retracement. All right? In this case, we are applying the Fibonacci ratio to the price alone. All right? When we are using Fibonacci time zone, we are applying Fibonacci ratio to the time. So the price, you see, this is the price. The vertical line is here. This, you see the price. This is the price on the vertical side of the chart. The horizontal line is the time. So when we are applying Fibonacci time zone, which also allow us to pinpoint possible reversal zone, all right, we are applying Fibonacci ratio to the time alone. But when we are using Fibonacci arcs, we know that with the Fibonacci arcs, okay, is applying the Fibonacci ratio both to the price and the time. All right? We need to understand that. Very, very important. All right? So the Fibonacci arc go one step ahead of the Fibonacci time zone, which only focus on the Fibonacci ratio applied to the time. All right? The purpose of this trading tutorial, all right, ladies and gentlemen, is to show traders and other market participants how one can effectively use this tool to make accurate decisions like a pro. All right, you need to understand. Okay, we know that okay, traders and investors dislike trading tools, okay, that do not work because money is involved. Yes or no? All right. But one thing I have found, ladies and gentlemen, what I've always said to traders, that the most important trading tool is what? The trader or the investor. Sometimes each trader will blame the tool or blame a system or blame a strategy, but sometimes, not always, okay, it's not the tool, it's the understanding, okay, is you can place, you can give the same tool to 10 traders or 10 investors, you will receive a different result. A trader may say this trading tool is useless. Another may say, I don't know what to say. Another one may say, this is my favorite tool. Thank you very much. It's the best tool. The same thing when we are using Fibonacci time zone, Fibonacci arc, Fibonacci ratios, Fibonacci retracement, Fibonacci extension. We want to understand it. And most importantly, okay, how one can master the tool. What I care about as a trader myself, I care about, okay, sharing with traders things that works, but the trader must work, okay, spend some time to learn, to master the tool. Let's get started. How, okay, to draw Fibonacci arc like a professional trader. I'm going to remove my line on the chart. I'm looking at the dollar Swiss franc currency pair. This currency pair moves in the opposite direction to the euro USD. It's also a leading currency pair like the euro USD. All right, so if the euro USD is going down, okay, this pair will go up. All right, and if the euro USD is going up, this pair will go down. All right, and if this pair is going up, the euro USD will be going down. Okay. There is a negative correlation between the euro USD and the dollar Swiss franc currency pair. Though here I'm using currency to show trader how to draw Fibonacci arc, one can apply the same strategy if one is trading stocks, commodity, or any other ETF, indices, or any other financial instrument. All right? So do not say that I don't trade forex, stay with us. Another thing I need to say to traders, if you have been learning about Fibonacci art, you may say to me, George, I already know about how to draw Fibonacci art and I don't need to watch the video. I recommend to you to watch the video because I want to share with you, okay, a trading tips that you will not find on YouTube or on the web. All right, I'll share trading tools, trading strategy that, okay, work. Okay, that's what I'm trying to do here. Okay. So the general way, okay, the common way, which maybe you already know, okay, how people draw Fibonacci arc to pinpoint possible reversal zone, they will join, okay, a high and a low. If the price goes down, they'll start drawing it from here to the low. If the price goes out from here to here, they will start from the low to the high. That's how a lot of traders draw their Fibonacci tool, their Fibonacci arc. But there is another way to draw it. That's why I say to you, if you already know how to draw Fibonacci arc, I encourage you to watch the full length of this video and, okay, to understand, okay, and to discover a new way of using this tool. So I'm going to start drawing it like the way everybody else is drawing it. 1 second, please. 1 second, please. Okay. Let me move away a little bit my spot. Okay, so the price went down from here to here, yes or no? Okay, we're on a monthly chart. When we are using Fibonacci arc, I recommend to trader to start using it from the weekly chart, monthly chart, quarterly chart, yearly chart. All right. If you want to go near the daily chart, use at least 3 days chart or 2 days chart. All right. It's still valid on all time frame. You can use it on hourly chart, 4-hour chart, but okay, for solid trade setup, I would prefer traders to use it, okay, from the weekly chart upward, okay? So, as I said to you, if price goes down from here to here, I click on my Fibonacci arc. I'm using TC2000 trading platform. I'll start drawing in from the top, boom, 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 to the down. So you see some line here. First arc, you see this is the arc rounding. It's the second arc, all right? And the third arc, and the fourth arc, and the fifth arc. These are Fibonacci ratio levels where we draw arcs. I want to show you something. What I was explaining to you, that the Fibonacci arc, okay, is combining, okay, it's applying the Fibonacci ratio to the price and the time. I'm going to draw now the normal Fibonacci retracement level. So when we are drawing the normal Fibonacci retracement level, price went down, we start from here. This is the normal Fibonacci retracement, you see here. So the first horizontal dotted red line, this is the 38.2% Fibonacci retracement level. In this case, applied to the price alone, which is the first line. The second line is the 50% Fibonacci retracement level, the dotted horizontal line. The third line is the 61.8% Fibonacci retracement level. The fourth line is 78%. I use 78%. I don't use 78.6. I just put it 78% right here. And now we have the 100%. And now we have Fibonacci extension levels here upward, going up. Okay? It makes sense? What the Fibonacci arc is doing is drawing arc. So the first line is the arc that we draw from, 2 points of, the normal Fibonacci level. So you see this is the 38.2%. You can see that the first arc is drawn around the 38.2% level. This is the first line, 38.2. So this is the 38.2% Fibonacci arc. Okay. The second one is drawn, which is this one. You see, this one is the second one. Is drawn from 2 points. Okay, of the 50%. Fibonacci, the normal 50% Fibonacci retracement arc, and so on. And the third one is drawn from the 78%, okay, Fibonacci arc. Okay? Now, this is the explanation about the Fibonacci arc itself. Now, I'm going to remove my some of my drawing, and we want to see whether this Fibonacci arc it has been useful for us to forecast or to predict possible reversal zone. Bear with me, ladies and gentlemen. Just to remove these spots. All right, so now we have it, okay? This is the Fibonacci arc. I draw it down, okay? Price went down from here to here. I'll start drawing from here to here, okay? So by looking at the Fibonacci arc, so price went down from here to here. The first Fibonacci arc, which is this one, is telling us that this zone here is a possible reversal zone. It's telling me also this second level here is also possible reversal zone if the price starts rallying it up, okay? So you can see that when the price comes near the first Fibonacci arc, some trader took profit here. You see there is a bearish candle here. This is why we say possible, not guaranteed. You see that the price went down for 1 month on the edge of the first Fibonacci arc, but quickly recovered and found a support. Everything else applied, which means this is giving us only a setup. So we say, okay, the price may change direction here. So because it has been bearish before and it rallied up to a possible reversal zone, if we receive a bearish signal in this zone, we will be happy to take it. All right? But if the signal fails, we will close the trade. We are not fighting the market, we are flowing with the market. We will draw our channel as normal. We will apply the trading drill as normal. This is a bearish setup in this zone. As the price came near, you see, it went up near this level. This is the red candle, went near the edge of this possible reversal zone around the 38.2% using the Fibonacci arc. This is a bearish setup. Now we don't just go and sell. This is a mistake. We don't just go and sell. We use the trading deal, the setup, the signal, and the low risk entry point. We will also check the fundamentals at that point in time, because the fundamentals, as I told you before, are the fuel of the market. If the fundamentals are solid, plus, okay, a bullish setup, the price is likely to go up more. If the fundamentals are weak and we have a bearish setup, the price is likely to go down. So both fundamental traders and technical traders will be selling at the same time. We want to check also the market environment at that time. The market environment is very important. Is the market volatile? Is the general market bearish around that time? If the general market is bearish that time, and we see a bearish setup and fundamentals are weak, okay, we can sell. But if the market environment is bearish and we see a bullish setup and also, okay, fundamentals are strong, we may decide to stay away because we don't want to fight the market. The market environment itself is bullish. We want to give priority to bullish setup. So we will not concentrate on bearish setup while the market environment itself is bullish. The opposite is also true. So this here, there was a signal to sell and people sold it on the edge of the first Fibonacci act. Prior rally to the next level, we on a monthly chart, probably on a daily chart, some people sold it, but it was a bullish month. So from this chart, we can switch to, let's go now. I'm going to call her, let's see if I can call her the second line. It will change everything. Okay, suppose we change time frame. Pay attention to the second Fibonacci act. I want to change time frame and see whether the price went down a little bit on the 3-day chart. Around, I can't see my act there. Okay, I'll go instead to the weekly chart. Here we are. This is the second. You see, this is second. There was no sell here near the second Fibonacci. This is a possible reversal zone, but there was no reversal. All right. But the third Fibonacci arc, you can see that the price is reversed here. Did you see it? On the weekly chart, you see, it came boom, 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 one, okay, and then you just reheat it here, the third one, on the edge of the Fibonacci arc. But look, if you draw a line there, so when the price hit the Fibonacci arc, so because it went down fast, you want to sell, what do you need to check? Are we in a resistance zone? Are we on the edge? Yes, we're on the edge of the Fibonacci arc. Are we in a resistance zone? These are the verifications. There was a resistance here, a resistance here. So we are not forgetting everything else. We are not trading the Fibonacci arc. We are trading the price. We must pay attention to the price. So we are at the resistance zone. Great. I want to sell on the edge. Yes, we're on the edge. Now we go and check Google for now. Check the fundamentals, market environment, apply the trading drill. This is a bearish setup. Wait for signal and use GSTW key 02. If the signal fell, come out. Beautiful, isn't it? On the edge, at the resistance zone, on the edge, all right? And the price went down. Look, whilst the price going down, the price looking for a better support level, you will be prepared to take profit at the next Fibonacci arc. You will also use Fibonacci arc to take profit on the edge. See, he hung around it, and then went a little bit horizontal, and continue again to retest it here, and finally here. Okay, going to go back again to the, I don't want the video to be too long, so we go back to our monthly chart. That's where we are drawing a line. So drawing this Fibonacci arc, this point and this point, like ordinary traders are doing it, on the third Fibonacci arc, there was a reversal. On the second Fibonacci arc, there was no reversal. The Fibonacci arcs allow us to pinpoint or to forecast possible reversal zone, but these are not guaranteed, okay, reversal zone. The mistake that investors are making or traders are making is that they assume that definitely this is a technical bearish setup. It will definitely go down, and the price will go up if the fundamentals are solid and the market environment is bullish. All right? Here it has been useful to us. Second one was not useful for us. The first one was a little bit useful, but then the price went back up. But if you just place a trade like old-fashioned traders, sell because the price is at a, okay, on the edge, you will be in trouble, okay, here. All right? So this is how a lot of ordinary traders, okay, common traders, draw their Fibonacci out to determine possible reversal zone. Another thing I want to share with traders, which I'll share with traders when I was talking about Fibonacci time zone, we will also pay attention to the median line between the two Fibonacci time zone. So how do I do that? I just draw a line, a median line between the channel. So you see this arc, I just draw a line like this. I say, okay, it's like a middle. Because I can't draw another arc through the middle, I just draw a line like this. Okay? Okay? Trader who understand French, oblique. Okay, a line that is a bit oblique. Okay, all right, something like that. Okay, you draw it like this. So just to say, okay, a middle of the two Fibonacci lines. Very often, sometimes the prime may not change direction on the edge of the Fibonacci arc, but will change direction near the median line of two Fibonacci arcs. So as I draw it now, you can see here, the price did find a support near, you see here, he went horizontal and tried to find a support near the middle arc, if you accept this as a middle arc of the two arcs here. Now, sometimes traders find it difficult to understand my accent because I speak French and I don't speak English, it's not my first language, so you need to pay attention. If you think you can understand my accent, well, you have to go and watch other videos, okay? But I've seen it, some traders find my accent difficult, but as they follow us more, they get used to my accent, okay? So do not assume that everybody speaks like yourself. There are people speaking a different accent in the world, and this is my accent, and you have to deal with it, okay? I try to speak slowly, all right? So the middle arc is this one, okay, of these two arcs, okay? So sometimes the prime may not change direction exactly on the edge of the normal Fibonacci arc, but we want to pay attention also to the middle line between the two Fibonacci arcs. Sometimes the price will just do exactly that. This is something else that you will not find on YouTube. But there are more that I'm going to share with you. The best approach that traders must use when they are using Fibonacci art is coming. So stay with us. Okay? I'm going to remove my Fibonacci arcs. So if you want to remove it, you are using TC2000, you see the dotted line like this, you just click on it, and then just click delete. Okay? It's gone. Here we see again, here what the price did. The price went up from here to here. The price that should complete one move first. So it went up from here to here. It started going down. Okay, so must go up first. Here it went down and start going up. So we use our Fibonacci arcs. Now it went up from here to here, and it start going down. We can't do it before it start changing direction. So here it start changing direction. So now I'll pull out my Fibonacci arc. I'll start from the low to the top because it went up from here, the starting point, to here. This is how a lot of ordinary traders, common traders, draw their Fibonacci arc. So again, the 38.2% was not useful. There was no reversal here. Second one, in fact, you see the price went below the second one, went back to retest it here. Here, this you can sell here. D below the second one, okay, and you retest it on the edge here because it's going down. You can use it as a resistance going down. Look, here there was a possible reversal as the price went to the fourth of Fibonacci, okay, arc. By the way, you can set your Fibonacci arc. If you click on the dotted line, you click on edit, you can change the ratio that you want to see on your, okay, you can set many arc, okay, you can set 5 or 6, okay, here I set only 4, have 38.2%, 50%, 61.8%, 100%, 161%, I can have a 261%, you see another one come now, 4 to 3%, and so on. All right? So you can see that on the third one, people took profit here, on the fourth one instead. Possible reversals. So what are we looking for? We want to pay attention if the price goes up, okay, and pull back near the 38.2% arc, 50% Fibonacci arc or 61.8% Fibonacci arc after a bullish move. If we receive a bullish signal on the edge or we have a valid signal, we will look for opportunity to buy. Because the prior move was bullish, now we have a retracement that is not 100%. Traders that understand Elliott wave pattern will also analyze, okay, the internal wave of the corrective move up to the edge of the Fibonacci arc, okay, and that will allow them to pinpoint, okay, possible reversal zone. This is about multi-talented trading, combining Fibonacci, Elliott wave, and the normal trading strategies. So here it is. It's about a setup. Now we say, okay, the price here now. Okay, where are we? Okay, so you pull back. So what has happened? There was a move up, but the price went below this low. Is it bullish? It's not bullish because why? It's not bullish. There was the price violated, okay, this low. In fact, what has happened? The price just retested the lower part of the fourth Fibonacci arc and went back to retest this support level. That's what I said to you. We are trading the price, not the act. You will sell here, break below this support level, retest it. This is okay, a bearish setup right here. You see this kind of how people sold it big time. So this is a bearish setup. We use the TSCWSYS, use your head, wait for signal, check the fundamental, check the market environment. Here on the edge of for this support level, break below it, retest at the edge of the fourth Fibonacci arc, rally up to retest at this level. Sometimes they are using one tool and they switch off completely. Draw your channel to determine the edge, the support, and it's still valid, and you will be all right. The Fibonacci arc is it's an additional trading tool that allows traders, okay, to see things that are not possible with other tools. But when we are using one tool, we do not forget everything else that we know before. So suppose you are using a Fibonacci arc here, and your attention is completely on the act. You'll miss this opportunity here to sell because you will forget about break below, retest, turn around. All right? And finally, you can see that 1, 2, 3, 4, 5, 6. On the 6th of Fibonacci arc, there was a reversal here on the edge, very close to the edge. Again, you will check, are we at a support level? Are we on the edge? We support level. We on a monthly chart. We are here now, isn't it? Let's color it into orange at that point in time. Let's color it into orange. So we want to know. So I say, okay, possible reversal. Okay, possible reversal. Okay. Now I draw my so my line there. This is my warning line. Going to color it also. Okay, it's not allowing me. This is my warning line. And then now I'll go to a higher time frame. I'll go to the yearly chart. Let's see which level is that. Okay. Do we have a support? I can't see anything here on my daily, on my yearly chart. It's just a new level. So, well, I don't have anything to tell me there's a support. But I know that this level here is a Fibonacci extension. Which one? Okay. Let's go back to the monthly chart and to see our drawing here. Okay, you see. All right, price went down all the way here. So multi-talented trading. We know that what has happened. The price went down from here to here and rally up here without going above it. So I want to use Fibonacci extension. I start from here, because down, a rally, and a continuation down to here. So I want to know my Fibonacci extension level. Okay, it's the other way around. If I want to use the extension, okay, I start from the low and I project it there. So which Fibonacci extension level is that? It's the level of 214. Can you see on my chart when I'm moving my cursor? 214 Fibonacci extension zone, which is also on the edge of my Fibonacci arc. So there is a hidden support here. Though I cannot see it on my yearly chart, there is the Fibonacci extensions allow us to determine hidden support and resistance level. And there is one here. It's the 214 Fibonacci extension level of the prior bearish move from here to here before this rally here. So we're on the edge. As a TSTWSY008 trader, I know that, okay, we are at a hidden support level. Okay, now I'll go and check the fundamental relating to this financial instrument. I'll check the market environment. I'll go to my signal time frame because I know that I have a bearish setup, at least after this candle. Okay, you have a doji like this. Okay, everybody is waiting to see whether we're going to have candlestick pattern, whether we're going to have, okay, another bullish candle. If the fundamentals are solid, okay, a bullish setup, and we receive a buy signal, after you see this candle, we wait for this candle to close first. Now we are watching it, okay? You see, it went down first before going up. Sometimes signal will fail. Signal will say, what a useless system. Fuse the data, the trend resumes. Why? Because if the smart money want to buy, the price must go down first. It's a retest. They want to make sure that there are buyers here. So that if there are buyers, they try to push it down, and the price won't go down very much, and then it go back up. Sometimes they want to sell, they want to see whether there are sellers. So they push it up first, and you will see that people will sell it and come back down. Then we know that there are sellers. So the price goes down. Price going to go down, you go up first. And sometimes traders, they use a system, they say, why the signal fell? Just be careful. It fell, come out, just come out, okay? There will be a losing, just come out. You receive it again, take it. Just be disciplined to take the signal consistently on the edge, all right? So here it is. This was a beautiful, okay, we combine Fibonacci extension, Fibonacci arc, look at the price itself, pay attention to the candlestick bar, apply the trading drill, and as a professional trader, we are in right here. It went up. It's going up. What you can also, again, as I explained to you already, pay attention always to the median line between the two. You see how I draw it again? I just put it like this. Because I can't draw the R between two Fibonacci R, I just put it like this. So rally, you see here, cheap. Okay, be aware of the median line. Again here, how do I do it? I just choose the middle somewhere, put a line, oblique, okay, like this. It's not perfectly arc, I just draw it like this. That's how I do it, okay, the middle point. Again here we see a reaction again near the middle, okay. All right, so this is how a lot of ordinary traders draw their Fibonacci arcs. Let's continue with this discussion because it's very important. We are talking about, okay, how to draw Fibonacci arc like professional traders and reveal it to traders the best approach that one can use, okay, if one is using this tool. Let's continue. The time now is 43 minutes past 12 p.m. in London. 43 minutes past 7 Eastern time. As I'm recording this video, okay, showing traders, okay, Fibonacci arc strategy. So we see from here to here, we draw it. So let's move on. I'm going to remove my spot. And before that, I want to check how long I'll be talking to you. This video is so important, especially for investors and also for swing traders and day traders. All right. I've been talking to you now for 32 minutes. Because this subject is so important, I will continue recording this video, allow the video to run more. Let's continue. So now the price went down from here. Okay, I'm just going to put my spot somewhere here. So it went down from here to here. Again, I will use my Fibonacci arc from the top. This is how a lot of ordinary and common traders are using their Fibonacci arc. And I have the first line, you see here. So it went down, it must go down first from A to B and start going up, okay, before we can apply our Fibonacci arc. These are the conditions that we must follow. All right, this is how we draw a Fibonacci arc. Do not just start drawing the Fibonacci arc when the move is not yet completed. So in this case, we will wait until this candle is completed and the price start going up. Then we will draw Fibonacci arc. If you are drawing it before the candle is completed or the move is completed, be okay, cautious. Okay. So the first Fibonacci arc this time, drawing from here to here, you see there was a bit of reaction here. So the price rallied up to that point. You see, there was a reaction, this bearish candle here on the edge of the first arc, followed by, okay, another bullish one, because the bearish momentum has diminished. In fact, traders that are using the 8-year wave who have understand this: one minimum price move, one, okay, two, okay, three, okay. After three, we will have careful. After three move, you are careful. All right. All right. You check the fundamental and see what's happening. Okay. Unless it's an impulsive move. Okay, so around the first Fibonacci R, which is at 38.2%, there was a bit of reaction. The second one also, you see, this is at 50% Fibonacci retracement level. This is a 50% Fibonacci arc. The second one here, a bit of reaction again on the edge. Okay, not bad, this one. The third one again, okay, 78% Fibonacci arc again on the edge. Here we are for the move from here. If I draw again my normal Fibonacci retracement, you see that, okay, this is my normal applied to the price, 38.2, 2 point, this point, this point. We draw the arc, 50% this point, and this point, we draw the arc, 78% this point, and this point, we draw the arc, okay, and so on, okay, and so on, okay? 61.8% is the third one, and the fourth one is 78%. We draw the arcs, okay? But the software will do it automatically, okay? So here again, around the third one, we have again a reaction, a bearish candle appear here, all right? But again, look here, okay? As I explained to you, do not forget what? The median line. So here is a tricky one. I just go like this. Don't cheat here. Just make it a bit equal to the side like this, okay? That's my median line. So it will be valid on this side, you see, roughly, okay? And so on. Here, I will just put it like this. To be aware of the middle point, I just draw it like this, okay? See how I draw it? It's not perfect because I can't draw the arc beautifully. Just put it like this. Again, a bit of reaction near the middle, okay? And that's why I say to you, be aware of the middle. All right, stay in the middle, all right? Stay in the middle, and you'll be all right, all right? Sometimes the price may not change direction on the edge of the Fibonacci arc itself, but you will see sometimes a reaction on or near the middle arc of two Fibonacci arcs. All right? Here, you see, there was no reaction, and he just break through it. Very often, what is happening, if the price crosses a Fibonacci R, as you see here, the price may try to go and retest the median line of, okay, so we see between two. As we are here, we see cross it like this. We will expect it to see to come near the median line. Sometimes the move will continue, or, so you see, it was going up, okay? But sometimes it will change direction to retest the median line. Sometimes it will continue, okay, the move. How do we know? Draw the trend line. How do we know? Just draw the trend line. Okay? So you see this move like this? If it drop out, we know that it's going to go gently to the median line. If it stay inside, it will go boom, 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 near the median line. Now here, as you can see, it came out of it like this. It looks more bullish for us. All right? So I just go like this, okay? And what I'm going to do, because I can't see the other line, I'll switch my time frame to the yearly chart. Okay, we're on the yearly chart. It's quite big. I'll go to the quarterly chart instead. Are you with me? This kind of exercise, do it. But I don't have another line. I can go now, click on the dotted line, click on edit, and I can bring one more line. It's far away. You see here? You see? It's here. And the median line, okay, okay, that is somewhere here. So I just adjust it a bit to not to cheat. All right. So between these two, just roughly, can go like this directly and see whether there is equality. You understand what I'm trying to do here? I hope so. Between this, just go and you get a picture, okay? Now, I don't want to waste my time too much, so the distance like this is not exact, so I may adjust my line because it's an arc, okay, something like that. Are you with me? Do you get what I'm trying to do? Okay, I hope so. Something like that. Okay, it's not exact because we want the line, because the line is not an equal. We don't have arc. I just draw it like this. Get a picture, just draw it roughly. Say, okay, middle, somewhere in this zone. You may continue staying beside this and come near this line somewhere here. If you come out, it come out. Okay. All right. You want to buy? Draw again the support. Okay. We want to buy. Are we on the edge? Are we at the support level? If we are resistance level, we want to draw the normal channel, the support and resistance level. So it's going up. There's a resistance here. All right. Breakable, retest, continuation. Okay. If you find a resistance, pull back. Okay, and so on. Don't forget the price. Do not spend most of your time looking at the Fibonacci arc. It's an excellent tool, but we want to use it correctly. We don't want to misuse the Fibonacci arc. We want to understand it, and also, most importantly, we want to master it. When we are using it, we are paying attention to the price itself, draw the key level, buy at support level, sell at a resistance level. If you want to buy at a resistance level, allow the price to go above the resistance level and to validate that resistance level as a support level. Gently, gently apply the trading triangle. Pay attention to the economy news and the market environments. Okay, do not use the technical alone. That's the old way of trading until the hedge fund invade this market. All right, do not use the technical alone. All right, so we see now. I'm going to go back again to the monthly charts. All right, it's quite a long video because it's very important that we finish with this subject. So we draw it from here to here. We see the reaction. I can do another one now. Okay, so it went up from here to here. Again, so far, I have not shared with you the best way to draw the Fibonacci arc. I'm still just showing you, okay, how other traders draw their Fibonacci arcs. Okay, so here you see it went up from here to here. We will do exactly again the same thing starting from here. All right, and we just draw it. Okay, and adjust the line carefully. Okay, all right. You see now, this was not useful. The first arc was not useful for us. In the first arc, the second one again, the third one, not really. A little bit, but not really. Okay, you see here, he went out to retest the edge of this channel. In fact, what has happened here, if you are concentrating too much on the arc, that's what you see here. There was what the price doing here. Okay, always look at the price itself. Okay, what's happening here? Horizontal market pattern. So if you combine that, you see here, come near the edge, he went out, touch it. Okay. Horizontal market pattern, okay, horizontal market. Now it came out of the horizontal market pattern. What do we need to do? Though we are using Fibonacci arc, we don't want to forget the market geometry. Projection came out, project it. So touch it, come down, you see? The projection of the top channel, that's where it stopped. Again, this is about multi-talented trading. Don't forget what you learn. And the media line is this one, see, of the arc. Finally, there was a reversal, okay, right here near the middle, okay, the middle point of these two arcs. Okay, it makes sense. It is also powerful. I said enough about how ordinary traders and common traders use the Fibonacci arc. I'm going to move one step ahead, and this time I want to show you the best approach when one is using the Fibonacci arc. It does not mean that what we are doing here, how other traders are using Fibonacci arc, is wrong. Yes, you can see that it has worked sometimes. Sometimes it does not work. What I have noticed, talking about the new strategy that I'm going to share with you now, I have noticed that this approach does not violate the market principle. What do I mean by that? The things that are called market stable data, things that remain intact in this market, with which we can work with, okay? So one example is the horizontal market pattern, the rising channel, and the declining channel. This is one example of market stable data. It doesn't change, price going down, price in a rising channel, displaying higher lows and higher high. Price going down, price will be in a declining channel, displaying lower lows, lower high. price is consolidating. This is what we call a balanced market. Price will be in a horizontal market pattern, display equal high and equal low in normal condition. Okay, the volatility will be low during that time of the balanced market. With that market stability data alone, we can trade without Fibonacci time zone, without Fibonacci arc, without Fibonacci retracement level, just using that simple market stable data. Now, how do we combine the Fibonacci arc with another market stable data? In this case, I want to talk about Elliott wave cycle. I recommend to traders who want, if you are a new trader, begin now. You don't know anything about Elliott wave, go to www.24elliottwave.com and also subscribe to our YouTube channel, the 24 Elliott Wave YouTube channel. At one point, whether you're an investor or trader, you'll be compelled to learn a little bit about market cycle and the wave pattern. This will allow you to improve your decision and to time the market more accurately. It also allow you to read the price itself, what we call the language of the price. All right? So do not discount the wave theory and call it mambo jumbo if you are a fundamental trader, okay? If you are a technical trader, do not discount the Google Assist test, the trading triangle, okay? It helps because you want to know what tool other traders are using, and if you also understand the tool that other traders are using, you are likely to understand the market better, okay? So what am I talking about, okay? The Elliott wave cycle is in the form of a doji number one. What do I mean by doji number one? So number one, the number one, okay, it's like this, isn't it? Number one is like this, isn't it? Okay? But a doji number one, what do I mean by that? Is this one. Is a one that turn around like this. Okay? But in fact, the price does not go vertical, so I'll put it like this. The price does not go vertical. So price goes up and then pull back. The motive wave and the corrective phase. So from the starting point of the motive wave up to the end of the corrective phase, that's what we call an Elliott wave cycle. A lot of traders think that the Elliott wave cycle is ending right here at the end of the motive wave. This is about trend. The motive phase is a trending phase, but the cycle, a bullish cycle, okay, contains, a bearish phase. This is what people don't understand. So price goes up, price must go down. But they move here from here all the way here. This is a cycle. This is an Elliott wave cycle. 1, 2, 3, 4, 5. 1, 2, 3. Motive wave, corrective phase. Okay? All right. So just I will simplify it to you very soon, and you'll get it. So don't get confused. Don't go away. Stay with us. It's going to be clear for you in a minute. So this is when the price is going up. Okay. The opposite is also true when the price is going down. So price go down. Normally we will say a doji one, inverted one, something like this. Doji, okay? It's number one, but a doji inverted one. But because the price does not go vertical, the price will go down in diagonal move. Okay, going to remove this one here, and this one also. And this time, price goes down from A to B, okay, and then rally up to here. This is the bearish motive wave, followed by the correction. 1, 2, 3, 4, 5 to the downside, impulsive wave, followed by a corrective wave. All right, so price, there was a bearish trend, and then there was a profit taking from here down to here, all the way here. This is the cycle. All right, this is the cycle. This is what we call the Elliott wave cycle. You see now? You want to understand that, and you want to master it. Even if you are an investor, right? You will combine that with fundamental analysis. Go to Google Finance, go to Yahoo Finance, subscribe to Bloomberg, subscribe to Financial Times, read the economy news about the financial instrument that you are trading, become an expert of it. let's move on. So we talk about a cycle. How do we combine? So this pattern is a market stable data, okay? An Elliott cycle is a form of a multi-way and a corrective way. It's a market stable data. You see it all the time, okay? It's a market stable data. We can work with that. Now we want to combine that with the how we draw our Fibonacci act. And you will not see that on YouTube. You don't see it, okay, on anywhere on the web, because it's my own tool. All right. Beginning of the year is going to give things for free, and that's why I'm sharing this with traders for the first time, okay? It makes sense? It is also powerful. So in this case, we want to look at the price. You can see here, it went down. So pay attention. It went down from here to here. Now, it went back up. It didn't go up all the way to the top. You see here, it went down and stopped somewhere in the middle, near the 50%, 61.8%, or 78.6% Fibonacci retracement level. If you want to know more about Fibonacci, go to www.dayprotrader.com or subscribe to Day Pro Trader YouTube channel. You will see excellent video at Day Pro Trader YouTube channel. All right? So we see here, so if I move my dotted line, this does what I'm doing here. It doesn't mean that this is definitely a cycle, but it has a pattern of a cycle. So we can use Fibonacci art together with a specific pattern. Now, it making sense to you? I can go on, and the video will be like 2 hours. But at one point, I need to wrap it up. So let's move on, okay? There are more to this. Probably I'll record another video in the future and share more tips about how to draw Fibonacci act, okay? Because traders hate things that do not work, okay? So you see here, it went down and went back up. This is a pattern. How do we use the Fibonacci act? In this scenario, you will start not from the beginning, but from the end. So from the end of the cycle, so you see here, the cycle has started here, down, and ended here. But in this case, you know how we were drawing it before, how everybody is drawing it? They are drawing it from the starting point, from a move from here to here. They are not using the market pattern or a market stable data. What I'm telling you now, you start from the end of the cycle and you draw it to the beginning of the cycle. All right? Okay. I think you understand it, okay? Let's remove that, okay? So now, where is the end of this move? I'm not saying that this is definitely a cycle, but it has the shape of a cycle. Went down, rally up here, change direction, okay? So now I can use my Fibonacci R, starting from the end, and I move it to the end of my move. It went down, so end to the beginning. Now look carefully. We're on a monthly chart, okay? Okay, I'm going to go, because we can't see other line here, so I'm going to change my time frame. Going to go to the quarterly chart. Hopefully we see other lines. Okay, there's one here. Look at this one. Okay, look at this beautiful one here. Look at that. Zoom. You see, first he found a support near the edge of this. Okay, this one here. Again, you will draw your normal support level on your, because we are trading a price. As I said, you do not concentrate too much on the price. So when you draw it, what I will recommend to you is to forget once you draw it, forget about the Fibonacci R. Now concentrate on the price. Draw the support, resistance, channel on the chart itself to determine, okay, the best place where you can enter the trade. Once you draw the Fibonacci R, forget about Fibonacci R, switch your attention to the price, draw the channel, and to see where you are, okay? Okay, it will give you more. You see here, price was consolidating in fact on this quarterly chart. You see, up, down, up. Draw your channel. You'll see here. This is the top of. Are you with me? Are you? This is the bread and butter. If I draw it roughly like this, okay, the price on this quarterly chart, we have an horizontal channel, something like that. Okay, blah, 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 okay, here, and also on the edge of our, okay, thing here. Okay, but this is where we started. Now, look here. You touch it here. You see the price went up a bit, okay, before continuing to go down, okay. It went up on the edge of this trend now. We can see more lines. Let's go to the yearly chart. Okay, the yearly chart is quite big now, okay. So you get the point. So what I want you to understand here is another way, okay, to draw the Fibonacci act, okay. I'm going back again to the monthly chart. So you see the first example. It was not very useful for us, but we understand something new, okay? As you can see, okay, again here, drawing you see here, this was also good place. See here, again, down, and so on and so on. Let's remove that, okay? Let's remove, okay, my Fibonacci act. Okay. All right. Remove these lines. And we are applying the Fibonacci act with okay, a market stable data based on the area wave cycle or based on a specific pattern. All right? Pattern. Patterns together with, okay, the Fibonacci act. So when you see a pattern, whether it's a zigzag pattern, you start from the end of the pattern to the beginning of the pattern. All right? Here again, what is happening here? Price went down from here to here. Yes or no? And then again, we see the same pattern again, a rally up to here before start changing direction. Down, up to the 50%, 61.8% zone. Down, up, yeah. And again, we start drawing our Fibonacci act from the end of the cycle to the beginning of the cycle. That's it. Again, we will monitor. Here again, this is another zone to watch. In this zone, if I draw my warning line in this zone, you see from this zone, the price just, there was a reversal here, yes or no, in this zone, yes or no. Allow, it just went a bit below that level. You want to pay, once you draw it, focus now on the price, draw your channel, your support and resistance level, and pay attention to the price. Once you draw your Fibonacci tool, Fibonacci out, as I'm showing you now, forget about it. Now concentrate on the price to determine the best place to buy or sell, combining the technical analysis and the fundamental. Again here, we are on a monthly chart. Let's switch time frame to the quarterly chart to see whether we're going to see more line, okay, and so on. Let's bring on now, I'm going to edit my thing and bring one more line to 61% there, okay, all right. Again here, all right, let's switch time frame to the yearly chart, okay. If you, all right, we are coming, it's coming near the edge on the yearly chart. Again here, touch it here on the edge, all right. Let's go back again to the monthly chart. Okay, as you can see, it went down from here and form this pattern. We start from the end of the pattern to the beginning of the pattern. We can also pay attention, again, when we are doing this, we can also pay attention to the middle point of two arcs. Sometimes the price may not change direction exactly on the edge of a Fibonacci arc, but we change direction on or near the middle, okay, arc of two Fibonacci arcs. Somewhere in this zone, you see the reaction again here. And again here, we will again draw somewhere. We are approaching it now. Yes, is that correct? Am I cheating? All right. Somewhere in this zone, we need to monitor this zone now. All right. Let's remove my drawing, and I want to show you another example again, using the Fibonacci arc together with the area wave cycle. All right. It makes sense? It's very, very powerful. this method, this new method of using Fibonacci art, you will see it on any time frame, but we recommend to traders to use it on a weekly chart, monthly chart, to the higher time frame, using the TSCWSY008 trading system, okay, the setup, the signal, and the low risk entry point. Do not use the technical alone. Check the fundamental and the market environment, okay, and trade like a professional trader, okay, all right? All right, we can apply this to ETF, to indices, we can apply it to sectors, okay, and okay, to commodity, especially to commodity. This is the best approach to use the Fibonacci art for commodities. All right, you see now, let's try something else here. You see this move here, it went up here, and just a little bit move here, it starts changing direction, okay, but it went up too fast, okay. Let's pretend that, okay, it start going up here, and we try to do this here, okay. Once again, we'll pull Fibonacci art from the beginning, from the end of the act, okay, to the beginning, okay, and see. Look at this one here, okay. Look at this one here. Not bad, not bad, not bad, not bad. Price was going down, come near possible reversal zone. We will be giving priority to bullish signal here. We draw, once we draw the Fibonacci R, we forget about it, we pay attention to the price. This is very important because a lot of traders will make that mistake. You draw it and your attention is on the Fibonacci arc alone, and you can be surprised. Draw it and then forget it, and then concentrate on the price. All right, draw it and then forget it, and then concentrate on the price. All right, and again here we can again draw the median line between two. Again, there was a reaction again near the middle of these two Fibonacci arcs. Okay, let's change time frame and go to the quarterly chart and see whether we see more line. Okay, nothing else to say. Let's go yearly chart. Okay, same scenario. Okay, going back again to my 30-minute chart. We have been recording the video for a while, nearly an hour now, even more. Okay, it's an hour, 1 minute, 40 seconds. Thank you for watching. All right, this is very important. We want to finish this, and we will finish very soon. I hope you are enjoying it also. I hope, and most importantly, you learn something from it, okay, to improve, okay, your trading and investment decision using the Fibonacci arc together with a specific market pattern. Okay, let's do one more example here. Price went up from here all the way up here. So it went up before going up, okay? So move up here, and then, okay, it pulled back here. All right, here we are. Okay, pull back, and we have the shape again, up, down, here, and then we start again doing the same process, starting from the end of the cycle to the beginning of the cycle. Adjust it exactly on the dot here of the tail. Again, okay, here, there was a reaction here, you see. So the first one that we use, you see, there was a reaction here. Again, here again, there was a reaction. This is a beautiful reaction here. Price went down, reached a possible reversal zone at, okay, a support level, okay. TSCWSY008 traders will put this currency pair on their watch list. Again, once I need to explain to you, at this point in time, we know that the the ECB is starting a quantitative easing. Their policy for the ECB, the policy for the ECB regarding the euro is to devalue the euro at this point in time. So we have a fundamental reason why we should sell the euro. Therefore, the dollar Swiss franc should be bullish. Negative correlation between the euro USD and the dollar Swiss franc. So because they are devaluing the euro USD, the dollar Swiss franc is likely to go up. We are at a reversal point, price pulling back, fundamental aligning with a technical sector, TSTWSY08, we go to the signal time frame. We want to catch it. If it fails, we come out. If it's on again, we are on steadily. Don't give up on it, flow with it on the edge, combining technical analysis and a fundamental. You see here again, a beautiful place to look for opportunity to sell, to buy, okay, using the Fibonacci arc as I show you here. This is the beginning of 2015, ladies and gentlemen, and I'll share with you one of my trading secrets, how to draw Fibonacci arc like a professional trader, combining, okay, the Fibonacci arc and the Elliott wave cycle, or with a specific pattern, or with a market stable data. There are more to this. Subscribe to the Pro Trader YouTube channel, subscribe to 24 Elliott Wave channel, subscribe to Joe Trio YouTube channel, subscribe to all our websites. Stay tuned, keep learning, keep improving. Don't use the technical alone, combine the technical and the fundamental. Ladies and gentlemen, I can keep on going on and on and on the whole day, but I will wrap it up here. I hope you can learn something for this video about how to draw Fibonacci arc like a pro. Okay, we encourage traders, give us tips up. If you like this video, if you dislike it, don't walk away. Give us the tip, your thumbs down. Right why you dislike it. Did I say too many? Okay. Was it too long? Okay. If you want us to continue with this series, put your comment below. What we are doing, the responder we receive from the video will give us okay, more encouragement to record similar video. So if I record a video about okay, Fibonacci arc, I don't see too much interaction, I will switch to another subject that I see more interaction. There are many, okay, criteria that I follow when I'm recording videos. This year I have been recording video about stocks because of the reaction that I see about stocks. If I don't see too much interaction with Forex and I see more interaction in one particular area, I will be recording more video in that particular area because we don't want to record the video and not see any interaction. This is the end of this video. We have talked about how to draw Fibonacci arc like a pro. I show you how ordinary traders draw the Fibonacci arc. If the price comes down from A to B, they will start drawing it from the starting point of the down move to the end of the down move. If the price goes up from A to B, they will start drawing it from the beginning of the up move to the end of the up move. I share with you that one should also pay attention to the middle arc between two Fibonacci arcs. If the price did not change direction on the edge of the Fibonacci arc itself, sometimes the price will change direction on or near the middle arc between two Fibonacci arcs. Once draw the Fibonacci arc, one should forget about it and pay attention to the price, draw the key level, draw the support and resistance level. You want to buy at a support and resistance level. If we are using the Fibonacci arc, we are using the Fibonacci arc to determine possible reversal zone. But these are not guaranteed reversal zone. We must use a top-down trading method by combining the technical analysis with the fundamental. The Fibonacci arcs we give us the setup. We will not just go and buy or sell because of the setup. We will now wait for a signal. If the signal fell, come out. All right? And then we receive the signal, we go to the entry time frame to minimize the risk on the edge. I also share with you my own trading secret about okay, Fibonacci arc, how I draw it. I use the Elliott wave cycle or a specific market stable data, okay, and I show you a specific pattern. When we start drawing this time from the end of the cycle to the beginning of the cycle, which is the contrary way to draw it to the general public, okay? So the purpose is to determine a possible reversal zone, but that's not the end of it. We must always use a top-down trading method plus, okay, the fundamental. We can apply the same strategy, okay, on the lower time frame, but I recommend to traders, okay, to go to the, okay, at least weekly chart, monthly chart, and yearly chart. We are now on the 2 hours chart for this, okay, currency pair. I will switch time frame instead, go to the 4-hour chart. And before I close this video, I will do a quick demonstration on the 4-hour chart for the dollar Swiss francs. Okay, you can see that it went up like this, okay. we are down now. Okay, so just to show you on the lower time frame, we can do exactly the same thing. So price was in a rising channel all the way here and then pull back. Okay, we have the pattern in place. All right, and we can also again use it as I show you from the end of the pattern to the beginning of the pattern to determine possible reverse zone. Okay, again, we don't want to forget the middle part of yes, somewhere. So we are near the middle part. And now, once we draw it, we don't want to forget the price. I'm on a 4-hour chart. I have my Fibonacci arc ready. I need to go to the higher time frame to validate, okay, my drawing. Where are the key levels? We are now concentrating on the price itself. It breaks above the resistance level on the 2-day chart. Okay, we want to pay attention to the price itself. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. Until the next time, enjoy yourself and be very happy. This is the end of this video talking about how to draw Fibonacci arcs like a pro.